Good morning, everybody. It's the 18th of August. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Jamie. Good morning, guys.
Good morning, mate. All right?
Morning.
How are you both doing?
Yeah, not too bad. Not too bad, thanks.
All
Good.
good.
Good to hear. Right, let's get stuck in then. So, first of all, we will start with the latest headlines and what's moving markets over the last 24 hours. Yesterday, we had solid underlying US retail sales. They were unchanged in July after a revised 0.8% increase the previous month and marginally lower than the forecasts were expecting. The data overall curbed immediate concerns over retail spending, although the data is not adjusted for prices, and there were mixed price trends for the month with a sharp decline in gasoline prices. The big news yesterday was the Fed and their minutes that came out around 7 o'clock UK time yesterday. They stated that some participants noted that the policy rate would have to reach a sufficiently restrictive level to control inflation and remain there for some time. There were also comments that there had been little progress in curbing inflation pressures so far. Officials, however, saw a slower pace of rate hikes at some point, and many officials also saw the hazard that the central bank could tighten more than necessary. The following movements off the back of that, we saw a limited shift in market expectations from the September policy stance. Markets pricing in around a 60% chance that we'll see a 50 basis point rate hike at the next meeting. In terms of other data, the Philly Fed manufacturing survey will be released today and will be well watched, following a much weaker than expected New York survey released earlier this week. We had some mixed jobs data from Australia overnight. The headline employment report was notably weaker than expected, with a decline close to 41,000 for July, but the unemployment rate declined to a fresh 48-year low at 3.4%. And finally, we had the Norges Bank expecting to raise interest rates again today at their policy meeting. The market expectations are for a further 50 basis point hike to 1.75%, but forward guidance will be crucial. So that's that for the news. Now we can get stuck into some charts. Steve, do you want to kick us off?
Yeah, sure. Let's take a look at Bitcoin. Little reminder of what it looks like on a weekly chart. This huge head and shoulders formation playing out. We seem to have bounced off support just below 18,000 and reacted higher from there. So we're having this corrective rally before the next move lower. Still plenty of room on the upside. Resistance, serious resistance doesn't come in until about 29,000 to 33,000. However, we are really struggling to get even past the 25,000 mark. So further downside on Bitcoin expected over the medium term, short term rally. This ending wedge formation looks to have broken down, and we're also trading down below and closed below the 21-day moving average. Now, the last time we did this was 26th of July, and we got a nice little reaction the following day, and this corrective period of market continued. However, let's wait and see. We're still in the Ichimoku cloud, so there's still a little bit of indecision here, and yeah, we can see how that plays out later in the day and this coming week. Looking at gold now in a bearish channel at the moment. It's reacted from just above the $1,800 mark, a nice bearish outside candle that formed on the 15th, and to pretty decent solid negative days to follow through. Again, the 21-day moving average is in focus at the moment, trading slightly below that, but a nice little sell-off yesterday, which helped Jamie's gun to head trade idea, so we can look at that later. Looking at the immediate support resistance for gold, we can see that we've got some sort of support down here between the 1752 and 1755 area. This was a low on multiple occasions, and we can see that we've broken down below the Ichimoku cloud. So the 4-hour chart has turned mildly bearish, and seems to be, even on the hourly chart, there seems to be no real slowdown here. Had a little bit bullish hammer posted at 5 o'clock yesterday, but the rallies have been sold into, so lower highs seen there. On silver, similar sort of price action, under pressure, Next support for silver comes in at 19.55. We're trading under the $20 mark, and yeah, further downside looks to be on the table for these commodities. That may be because of dollar strength. We'll see when Joe takes a look in a second. Other markets to look at: copper has broken down below the 4-hour Ichimoku cloud also, and it's taken out some decent support at 355. However, it has bounced back, so a little bit of hope there. Copper hanging on to some bullish resolve. Oil, let's not forget about oil. I nearly skipped past it, poor old oil. Yeah, the daily chart yesterday, we saw oil inventories yesterday, which was a little bit better than expected. We saw a move to the upside, and but overall on the day, a doji candle, which is an indecisive candle. We had the move, well, open and close pretty much at the same spot. Are we seeing the signs of maybe a short-term bottom? The $85 mark is decent support, because it was, if we go all the way back to here, 25th of October 2021, so almost a year ago, not quite, we saw that act as a top, that formed a top at just under the $85 mark, and now we should find a little bit of support in there. I know it's a long time since that resistance was put in place. It then turned into support around about the start of the year, and it's been retested now. So if we look at where did we start the year? So we started the year all the way down here at $75, and we've seen that big move up to $125. But it may be a sign that we could be heading towards those early advances that we saw at the start of the year at $75. Brent crude, that's a little bit of a different story, because it's trading at a premium over WTI crude oil, a $5.50 premium, which was more than it was at the start of the year. However, there's still a little bit of room now for Brent crude oil. The support really doesn't come in until around about $85. We're trading at 92.80 now, so $7.50 on the downside for that. Natural gas still remains quite buoyant, although we've not got a nice little spike higher yesterday. Got up to 963. Now that's pretty close to the 8th of June high, 965. It ended up forming what looks a little bit like a shooting star candle. The body of the candle is a little bit bigger than I would like. It would be nice if it was smaller. So if we got a higher spike or a lower open yesterday, it would look a lot nicer, but it does look to be the first form of rejection since the 8th of August. So watch this carefully today. Resistance obviously at this 965 level, and if we can manage to get a break down below the 910 area, then we should see maybe some really sort of like weak stops being hit, and potential for further downside. Oh, someone at the door. Potential for further downside, and they could even form an evening star formation there. So that's one to watch today.
Thanks, Steve, and thanks, doggies. Good morning to them. Okay, let's take a look at FX then. So, dollar index obviously going to be front and center, given that we had the Federal Reserve minutes yesterday, and initially we did see a little bit of paring back of gains that we made in yesterday's session. So we did close off the highs of the session, but overall still looks pretty strong, pretty robust. We've had the breakout of this bearish channel, corrective channel, which fell down to a short-term 50% fib level, which held quite nicely, and we've seen prices continue to move higher. So very much on the front foot again today, up by 0.15% as things stand. And based on the break of this corrective channel, we'd be looking really for a retest of the recent highs. So we've got some resistance highlighted at 108.74. We have to go some way back on the chart on the left-hand side to find when that was last relevant. Hell of a long way back to this level here, which was back in 2002, so pretty significant stuff. Obviously, we did post a new high above that quite recently, and again, we would expect that to be challenged in line with this bullish uptrend that we're currently in. If we take a look at Euro US dollar, we can see that that has broken out of a corrective wedge to the downside following that selling that we saw on the 15th of August. Yesterday, we saw a doji candle posted on the daily chart, just highlighting more indecision, but the robustness of that break and the how dynamic that break was to the downside, impulsive even to the downside, we can really expect to see lower prices. We'll be expecting to see a retest of the parity level at some point soon. As I've mentioned previously, it wasn't really anything technical at the one level, just really more psychological, and it did a pretty good job, as we can see here. We did see a little bit of an overshoot to the downside, but ultimately that was defended by speculators and prices rose only as far as the underside of these previous lows, which acted pretty nicely as resistance. So lower prices still expected in the euro versus the US dollar while this dollar strength continues. Looking at cable, that's been quite sideways and choppy in recent sessions, but yesterday we saw engulfing candle formed on the daily chart and prices beginning to move lower. If we can take out these lows that you can just about make out on this chart, just try and zoom them in. We've got a couple of candle wicks here, which we're in the process of trying to break down below. If we can see that, then pretty much sets up a move back to those lows you would have thought at 117.60-ish. So still very much under pressure, performing a little bit better than the euro versus the dollar at the minute, but it doesn't appear as though that's pretty difficult at the moment. Looking at some of the other currencies linked to the US dollar, the Aussie yesterday, quite a impulsive move lower on that. Breaking down through this corrective channel that seems to have formed on the daily chart. So that may end this corrective move and suggest that we are going to see a continuation lower. As you can see here, we do have a sequence of lower highs, and that has remained in place, and therefore we can look for lower prices. The lows we got down to in mid-July would be the next target on the downside. We do have a 50% fib level, a little bit of messy price action around that, so it didn't act precisely as support, but did a good enough job. That's down at 67.56, so be looking for a move down there in the short term. Let's take a look at New Zealand dollar versus US dollar. Similar sort of situation to what we've just seen on the Aussie, actually. So we broke out this wedge to the upside. We are still forming a sequence of lower highs. Let's just get this drawn on for effect. So we saw the lows that we posted there in mid-July. We saw a break lower of that yesterday, and prices looking to move lower yet again today. So the low that we posted was around 60.58, and that would be the downside target on New Zealand dollar versus the US dollar. Take a look at dollar CAD. Seems to be bouncing around a bit messy, really, all in all. Not really much to gain from that chart, although we did see a pretty decent session yesterday, engulfing all of the previous day's losses. Let's take a look at dollar yen. So that is being restricted by this level of resistance at 135.56 at the moment. So a bit of consolidation, a bit of sideways price action. We saw the long term or the longish term uptrend broken, and since then prices have been pretty choppy and sideways, being held at 131.25. But this resistance building at 135.56. A break above this, then we can start targeting a move back up to those highs at 139.38. Okay, let's take a look at indices. Start off with some of the APAC ones to begin with. So Aussie 200, ASX 200, decent move to the upside, as we've seen across all markets pretty much, but it does have this feeling as though it's running out of a little bit of steam. The ranges on the days are becoming narrower and narrower. You can see obviously there was a big phase here of a lot of indecision and sideways price action. Then we saw a push to the upside, but in the last 2, 3, if you include today, what we've seen so far, really quite narrow sessions and fast approaching this 61.8% fib level at 71.61. So I think personally we're going to start to see this run out of a little bit of steam quite soon. Obviously the dollar strength continues to be very much in place, so clearly attracting a lot of interest as a safe haven. Rare that you would see really the indices perform as well as a safe haven because clearly they're not. They do have a fair amount of risk associated with them on in a normal market condition. Let's take a look at China. So we've seen prices really go against the grain here with regards to the rest of the indices that we're looking at on the European side of things. Little bit of a move to the upside in recent sessions, decent-ish session yesterday, but overall I still think the pressure remains very much on this, and we're just seeing a bit of consolidation before we continue to see more downside in the China 50 index. DAX was an interesting one yesterday. Really big red candle that formed on the daily chart, posting a bearish outside day. So we engulfed all of the previous day's gains that we posted, closed very much in the red. Flat as things stand at the moment. Probably one of the only indices actually you can see on my watch list here that's green, apart from the SA40. But that looks to be a bit under pressure as well. Just take a quick look and see if we've got any short-term trend lines here. Something like that. We saw a break of that yesterday, so that could spark a continuation to the downside in the short term. Looking at the US markets, we saw a doji posted here on the 16th, and since then prices have rolled over a little to the downside. We do have some resistance between 13,953 to 13,902. So I'd be expecting gains to be capped in and around this region. But it looks like we're seeing a bit of a rollover to the downside here. So we may see a retest of this support level around 13,000 take shape over the coming sessions. As we've spoken about on numerous occasions now, it doesn't feel like these indices have been well supported in terms of volume. There's not been a massive amount of participation. It is the summer months in Europe, and typically that does mean that we see lighter volumes. So I'm very cautious about whether or not to trust this rally. And I know that's a key question being asked across the market at the moment. Are people missing out? Is this the start of a new bull market and an upturn in markets, or is this a bear market rally? And we're going to see potentially lower prices. Let's take a look at the S&P, always a better gauge really for the US market because obviously it's a much broader index, 500 stocks as opposed to 100 on the NASDAQ. Again, similar sort of situation. It has burst through a number of resistance levels actually, but we're fast approaching a band of resistance that we've got highlighted on the chart here, which is between 4365 to 4438. So expecting gains to be capped in this region. May not even get there. This may be the start of the rollover to the downside. Next support down really to consider is probably these highs here. I would say somewhere around that region, which is 4190-ish. Below that, looking for 4106. Going to finish off with the FTSE 100. We've seen that rally into a 78.6% level. It did overshoot it a little bit, but we're closing back below it as things stand at the minute. Very early in the session, of course, to say it's closed anywhere, but something to bear in mind. A huge level of resistance here, around 76.87. The FTSE has outperformed and overall looks probably better than most, but looks to me like we could be about to roll over to the downside here. So do keep that in mind. Okay, that's it from me. Jamie, do you want to take us through some stocks?
Yeah, I will do. Thank you, Joe. Just actually finishing off on the S&P, we ran right into that 200-day moving average as well,
Love that.
which really is kind of nailed that moving average there, and the selling really started at that point. So looks like we'll have a bit of a sell-off from that
Very
point.
well watched indicator, the 200-day moving average. Thank you for pointing that out, Jamie. I should have been on that.
No,
Took
that's
me
all
to
good.
school on that.
I saw someone tweet it. I would have missed it otherwise. But yeah, right, a pretty key level there. And didn't, on a couple of days ago, tried to trade above it and it closed just below it. So it's really done a good job there. We'll dive into some individual stocks though. And starting off, let me put it up. We looked at Cineworld yesterday, and look, it says it's up 20% today. I don't care because I'm looking at yesterday, and we had this huge. It wasn't actually earnings. It was I think it was guidance. We'll have a look at why, but look at the volume on that. Traded 221 million shares yesterday. Its average the day before was 3.9 million. So a huge there volume. If I zoom out, you don't even have to really look at the chart here, but just look at this. It sticks out like a sore thumb. A pretty painful day. I think it was down about 60%. Obviously, you can't tell now because it's already open this morning. But I think it was about 60% down. This says 44. It was more than that. Wednesday disclosed that it was negotiating a comprehensive deleveraging transaction with shareholders amid fears that continuing low admissions in its cinemas will hurt its trading and liquidity position in the near term. So, yeah, a pretty substantial fall off there. It's been a pretty nasty looking downtrend for a while. We've had these gaps to the downside. The heavier volume days you can see back in December and then after earnings last time have both been high volume red days. So, yeah, downtrends, you know, you've got to be careful trying to buy stocks in downtrend. We had this nice descending triangle, which I think we actually might put out an idea for at the time. But yeah, enough on Cineworld. It's not looking good. Up 20% today, though. I mean, I wouldn't read too much into that. On the flip side of that, we've got our biggest gainer, Blue Water Vaccines. Not particularly high volume stock. I couldn't really find too much that did particularly well. We'll look at Bed Bath & Beyond again in a bit, though. But here we go, you know, up 199%. You can't really ignore that. It's good entertainment. Let's see what we've got here. Blue Water Vaccines said plans to evaluate its virus-like particle platform to possibly develop a vaccine for monkeypox. Obviously, that's been the key. Well, is that like the new? I guess it's the new virus. Hopefully, it's not something that is as serious as COVID. But obviously, a vaccine would be great, and that is shot up on the news that it could happen. So 199% yesterday, up for Blue Water Vaccines. We'll check out the stock heat map. Not too much going on today. I mean, it was, as we just saw in the S&P 500, it was a slight down day. But somehow Apple just keeps on plodding upwards, just like 1% or 0.5% each day. I think it's like 2 or 3% off all-time highs now, which is kind of crazy, considering the broader market sell-off. But we'll check that out in a sec. But yeah, Google down almost 2%, Meta down 2.5%. Amazon down almost 2%. It was just, you know, nothing really standing out. And the video was down 3%. What have we got here? TXNO. This really tests my the knowledge of the tickers for me. Sometimes I don't get them right. But yeah, a pretty a pretty flat day, but down a little bit. We'll check out some of these individual names. We said we'd have a look at Apple. I mean, look at this. Somehow it's just kind of, I don't know, it's just kind of gone up with not really any selling. We've been noting this for a little while now. A load of gaps on the upside, and we're really close to the all-time highs on Apple. If we bring up a weekly chart, you can see we've had 1, 2, 3, 4, 5, 6. This would be the 7th week if we close up this week that it is closed above its open, which is really crazy. I know we've had a bit of a rally in the S&P, but it's not been to the extent of Apple, so really outperforming. I think we checked out the other day its relative strength against the S&P, and it's at its highest level that's ever been. So yeah, I mean, it's getting towards its all-time highs. There should be you'd think there'd be some sellers at that point. It would make sense for a bit of a good area for the sellers to come in, but you never really know, to be honest. It's a bit stupid if you ask me. I don't know how. AMC, look at this, down 13.91%. We've been keeping an eye on this over the last week, so with the squeeze we had. But yeah, closing right at the low of the day yesterday, so that looks like it's coming back down to earth a little bit. We've got this support level here with previous resistance, so maybe find some buyers at about that $20 level. It's also psychological, so it makes sense that try to get some buys in at that point, but we'll have to see. Down 13.91% though. We want to look at Bed Bath & Beyond because this is still squeezing up somehow. Wall Street Bet's doing its thing. It has run into a bit of resistance on a technical level, so I mean, it's not perfect, but just the kind of this area, you can see it found sellers there, and you know, it gapped up hugely again yesterday. I mean, the gaps are what I think is really crazy about this, and the volume's still really high, so perhaps a bit of profit taking. I mean, you can see by this candle we closed near the low of the day despite being up 11.7%, so perhaps a bit of profit taking there. What else do we want to look at? I don't think there was too much that really interested me. Coinbase still in perhaps a bit of a corrective formation. I mean, I know how we feel about a lot of the big cryptocurrencies, perhaps in a bit of a move upward that won't be sustained for too long. But looking at Coinbase, this looks quite strong despite this really aggressive sell-off we saw. It looks like we formed a bit of a bottom here, and we broke above these resistance levels we had noted, and perhaps now to act as a bit of support there. Volume was also starting to come off it as well, so we'll keep an eye on that. What else do we want to look at? Costco? Not really. No, not really. I mean, it's been quite nice though. I mean, this is rallied quite nicely. Had a little kind of flag type pattern here, and it's broken above that. So that's been looking pretty good recently. Obviously, we noted how the trend line held up really, really well back in. I mean, that was in May. I don't know. People maybe haven't been around since May, but yeah, interesting trend line holding up really well there. Let's have a look at GME. I mean, nothing too much to write home about. It's quite choppy after we had this breakout. Volume's still up a fair bit though. It's certainly up on the 20 period average. Not too much to write home about there. Robinhood, we ran into a bit of a, I mean, I wouldn't really call this resistance level. I've just drawn a red line really. Some people may argue that's just kind of technical analysis in a nutshell, but I believe in it. We have run into a bit of selling here. But again, this looks formed a bit of at least a short-term bottom. But you know, if we are going to see a bit of a sell-off in the broader market, perhaps we'll see these stocks like Robinhood return to lower levels. I'm thinking on the downside, let's have a look at some fib targets we can have a look at, and that's the wrong button. Here we go. There we are. So let's put out the 38.2. So these are the three main fibs. Actually, I don't really love the 50. 71. So I think, you know, but the 50 here, it coincides with this previous resistance, so that could be quite a nice level to get some buyers back into the market. Also this previous support level throughout May, so keep an eye on that. Lift down 7%, not really. I don't think there's too much. I want to have a quick look at Novavax. We had this pretty huge gap down, bit of a consolidation, and that looks like it might start moving lower again. It was down 8% yesterday. I mean, this candle looks pretty insignificant, but 8% is obviously a fair chunk. Where do we go from here? We've looked at this a fair bit over the last kind of 3 or 4 months. Let's take a fib. I think we're past all major fibs. Yeah, we are on the downside, so I don't know. How low can it go? Let's look at the support levels. We've got a bit of a support at kind of here. You can see it's touched it a few times, so I mean, it's still a fair way away. That's still like another 45% drop from where we are currently, so perhaps in a little bit of trouble. Novavax, we thought that for a little while though. Riot was down. Let's have a look. Yeah, Riot was down 8.94% yesterday, returning to this resistance breakout level. We had an inverse head and shoulders bottom play out, coming back now to retest that breakout level. Not a bad area perhaps to get some decent risk reward if you're into that kind of thing. The kind of thing I'd be looking at, selling along around this level, and depends on how aggressive you want to be with your stop. I'd probably try and either put it below this consolidation here, or if you wanted to give it a bit more room, below this the right side of the shoulder. And then in terms of a target, I'd be looking for something like, let's see what we've got. We've got fib levels, you know, this 50% again coincides with the support, so that kind of thing is what I'd be looking at here. That gives you quite a nice 3.13 risk reward if you are going to look at that as an idea. I think that's pretty much it though. Nothing really standing out for me. Like I say, a bit of a flat day, but certainly overall, I think, I mean, it shows a lot of these stocks look like they had really bad days, but as the market's more led by kind of 3, 4, 5 names, it wasn't as down as a lot of these stocks were. But yeah, should we move on to our gun to the head trades?
Yeah, one thing that I did see, just with regards to what's going on in some of these stocks in the US, was this article on Zero Hedge. A 20-year-old student acquired 6% of Bed Bath & Beyond and made $110 million in 3 weeks.
That's
ballsy stuff, right?
How do you get 6% of Bed Bath & Beyond?
So he invested nearly $25 million, which I think he wrote an activist letter to the management back in July, raised money through friends and family. Obviously, he's got some wealthy friends and family.
I was going to say.
But yeah, he was acquiring his stake down here. It showed up on the list of shareholders and managed to cash out somewhere around here. Pretty spectacular stuff.
That's crazy. I'm going to write a letter to my mum and ask her if she doesn't give me 25 million. That's an absurd amount of money.
Yeah.
Yeah, well, you wouldn't get away with that over here, would you? Raising 27 million from friends and family? I think it's illegal.
Is it?
Yeah, pretty much. Yeah, I think
Yeah,
if you
well,
get sort of like, I mean, friends and family funds and things like that, you can sort of like reasonable amounts of money, but 27 million, he must have a rich uncle or something. But even when you sort of talk about that sorts of money, that's when like the
He actually
regulators get
did
involved.
reference an uncle on there. He said there was an
Did he?
uncle who was involved in pharmaceuticals or something like that.
that makes
Yeah,
sense.
cool. I
Maybe
mean,
yeah, he was just using his
yeah,
nephew, but
yeah,
he was the big swinging doodah
Yeah,
behind
yeah.
it.
I think there's more to the
self-made man.
story. I'm sure we'll see a follow-up story at some point in the future.
Yeah, quite possibly.
Yeah.
Okay, gun to the head. So yesterday we placed 3 trades. Just so you know the score with this, I'll bring it up on the slides. Who's doing that?
That's not me.
Right, so each of us call a live trade on the video each day. The ideas must have stops and targets. They must have risk reward ratios in excess of 2 to 1. They're all placed at market, and the ideas will expire at 9 p.m. or when the stop or the target is hit. It's just a bit of fun. It is highly speculative. If you want to follow them, please feel free to do so. But obviously, take note of the warning there. We're just coming up with ideas pretty much on the fly and hope that they work out between now and the end of the session. So yesterday we published 3 ideas, as we always do, on our TradingView profile. Check them out, signal_center. Jamie, you were selling gold yesterday into a nice resistance level, as we can see there. And it played out quite nicely for you. You was nicely on side at 9 o'clock. I think it was just around 1R from memory. Let me check. 1.31R. So well done to you. Still looks pretty good, so no reason why that may not go on to actually eventually reach the target. But of course, for the purpose of the game, that was closed off at 9 p.m. last night. Now, the main event, Mr. O'Hare, you went long of dollar CAD yesterday, and that worked out very nicely indeed, smashing the
Lovely.
target by around
Ooh.
2 o'clock in the afternoon. So congratulations to you. That's a 2.44R return on your idea. I went short of oil. And sadly that was stopped out. Steve, we talked about the oil inventories out yesterday, and
Yeah.
this is a pretty good reason to highlight that when we do get big numbers out or significant data points out during the session, they can create a lot of volatility, as we saw here on this candle, and that is obviously one of the risks that we have to deal with on a daily basis. So that didn't work out. That's the game. We move on to the next one, but all in all, pretty good day for us collectively. So today's a new day. We've got 3 new ideas to come up with. Who wants to go first?
I don't mind going first. I'm all set up.
There you go.
As I was saying, that natural gas I've just looked at, it stalled at this resistance level and reversed sharply, forming a bit of a shooting star like candle overnight, not a classic one. And we've seen a little bit of an uptick this morning, and basically I'm thinking this may be preempting the opportunity of a rejection here. On the 4-hour candle also, you can see this this doji candle again, shooting star like. So that's showing signs of rejection on that 4-hour candle. So looking at the hourly chart, there is a really messy head and shoulders formation in here. The shoulder comes in around about $9.31. We're currently trading at 9.27. Oh, we'll move down from there. So yeah, I'm going to sell it here at 9.27. The stop will be at 9.39 and the target will be 8.91. That'll be 3 to 1 risk reward for me. I'll publish that now.
Best of luck. Jamie, you got one ready?
Yep, I'm good to go. So actually, this is one you had a little look at, Joe. You looked at the DAX, the German index. You noted a couple of things that I like here. We've got this bearish outside candle we see here, really, really bearish looking candle. A bit of a break of this trend line you saw. And for me, if we then just break this down to an hourly chart, I can move this back a little bit, but this aggressive selling is just, for me, I mean, I'd love this hard and fast rule, but when I do see something like this, and I'm looking for like a gun to head trade, I just think, after a period of consolidation, we might get that second move lower. To me, the fact that we've seen this big kind of green candle, I'm not too concerned. To me, this just helps with the risk reward a bit. So we're gonna look to sell this a bit more, how we can keep the stop really tight. And we can target these support levels down here. I think that's what we'll do. So something like this, selling the DAX at current price of 13,682. There we go. Profit level at 13,512, and we can keep the stop. What are we saying the stop? We'll move it up a little bit. So 13,724. There we go. So if we do get this play out today, 4.05 our return on that. Yeah, just, I mean, there's nothing too crazy about this. Just, break the trend line, outside day, consolidation. Just thinking, let's see if we can get a move lower. Nice risk reward there.
Cool. I think I'm looking at a similar theme really with indices. Looking at NASDAQ, just we have on the daily chart here, we can see we're in a downtrend. We can see we've seen this rally, which has been built on not a lot from our perspective in terms of volume. We are appearing to be maybe rolling over. We posted that doji candle on the 16th, which may highlight some indecision. We followed that up with some selling, and we're on the back foot again today, down by 0.4% as things stand. So I'm looking at fading this. I think it could have potentially run its course, and therefore I want to be looking at getting short. Looking at the intraday setup, potentially forming some sort of short-term top here. It seems to be sort of rounding off a little bit. I've drawn a black line through what potentially could be a head and shoulders top, although it's not a straightforward one. So going with the left shoulder here, this being the head, and a smaller right shoulder. Hasn't quite broke it, so it's not confirmed, but I've got a gun to my head, so I'm going to go with it. I'm going to sell it at the current price of 13,420. I'm going to target a move down to this support zone that I've highlighted at 13,088, and I've got a stop loss at 13,512. So that's a 3.69 risk reward ratio. That's ready to go. Going to be published straight to the profile now if anybody wants to check it out or follow how it plays out between now and 9 o'clock. As with all the trades, feel free to do so. That's live right now. Okay, so that's our three trades today. In terms of data later on, we need to keep an eye out for. Let's bring up the calendar. So we've got US jobless claims at 1:30. Then at the same time, we've got the US Philly Fed Manufacturing Index, which, as we said, is likely to be well watched because we had the New York survey released earlier in the week, and that had a pretty important say on things as well. So keep an eye out for that. And other than that, there's not much else to watch out for, to be honest, on the economic front for the rest of the week. Okay, that's that. Guys, got anything to add before we wrap it up?
No, be careful out there.
Sorry, I actually do have something to say. Something I missed earlier. I know. Here we go. Just quickly before we go, I wanted to look at my football club, Man United. Elon said he was going to buy it. So this moved up 7%. No, he tweeted it. So yeah. But it did actually spark a 7% move up in the club. Not much is looking up with the club at the moment, so you've got to take these wins while you can. And I think, just had a little check of the news, Glazers are saying they'd be open to selling a minority stake in the club.
Only a minority?
Yeah, I'd rather a bit more than that, to be completely honest. But look, stock price is going up. Maybe we'll start moving up the table, and we end up winning the league. That's kind of my prediction. It could be bold, but I'm optimistic about the future.
Up until then, I thought you were a half decent analyst. Up until then, Jamie.
Yeah.
Credibility, you're just a hopeless romantic, just like most of us.
Yeah. No, you're right. I am. No, I mean, I think we will honestly finish like 11th. If I had to guess, that's where I'm thinking.
You hope.
I think you're punching there.
Hey.
Yeah. Anyway, we're enjoying that. So yeah, okay, let's wrap it up there, guys. Have a great day, everybody, and we'll be back tomorrow morning.
Cheers.
Bye-bye.